Yeah, I mean, there are plenty of negative headlines out there, right? I mean, well beyond even China. I mean, it's just a very difficult time for consumers and for the macro backdrop in general. I think they set the table fairly well last quarter for the rest of the year and even going into this holiday season. So we're not expecting a whole lot. I mean, if you look last quarter, product revenue was actually down 4%. You flip to the other side there, though. I mean, services revenue was up 8%, actually up double digits if you exclude currency impacts. So again, they see that services growth accelerating, and while the competition in China is heating up, the China numbers are still accelerating. I think that's important to note. And then one final option here with Apple, one final opportunity I think investors ought to keep in mind. It's much further down the road, but there's kind of like this free call option when it comes to India, right? I mean, India is it's a country that really is just coming online here in regard to the smartphone and how much they're willing to actually pay for smartphones. We see the Indian consumer willing to pay more and more. And so I think over the coming decade plus, we're going to see India materialize as a terrific opportunity for Apple. And ultimately, that'll be something that really boosts that top and bottom line.
Jason, India is a really interesting point just on the demand side and on the supply chain side. So at this point, can you quantify what that means in material revenue stream terms for Apple? And when you throw in what Apple have been doing with the M2 chip and shifting some supply chains to India, to what degree are they de-risked from the issues coming out of China?
That's really a neat part of this story that, you know, if you want to quantify it, I mean, India represents around $6 billion in revenue today for Apple. So that's like 1.5% of the total top line there. It's not very material, but you can see the opportunity there when you look at China's $75 billion in revenue, around 20% of the overall business. I mean, it shows you the opportunity that's there. And then to your point on just the manufacturing side, the supply side, absolutely, you have to respect this choice to de-risk away from China, diversify that supply chain a little bit, that manufacturing chain, so that they have more options going forward. I think we're seeing more and more companies taking that into consideration here as they look at their supply chains in order to make it a little bit less disruptible in the future.